So welcome again to another edition of Wednesday Live session. We're going to be looking at some charts, some setup, right? I'm going to start from GBP USD, guys. Of course, we have to go to trading economics, tradingeconomics.com. You have to go to tradingeconomics.com and we'll try to look at Great Britain, United Kingdom here, guys. Look at the stock market, it's quite doing well. The GDP growth rate 0.8 here and 1.3 here. It's coming down. Annual growth rate, okay, this growth rate, but annual growth rate is super fine, 8.7 compared to 6.6. That's good. Unemployment rate is marginally down. Of course, if the growth annual growth rate is increased, you should know the unemployment will drop. That's it. Look at the inflation, guys, from 7 to 9. And because inflation is increasing, interest rate will have to increase. Can you see interest rate from 0.75 to 1? Based on what we learned, if inflation is increasing, the Bank of England will have to use the rate decision, high rate decision, the high rates to lower inflation. That's what they have done here. Okay, so you look at the trade balance. Honestly, trade balance is nothing to write home about. UK right now is importing more than it's exporting. Look at but of course the current account is quite good. It's quite good. These are some of those things. Okay. Look at the government. These figures are 2021. Those look at 2021, guys. This 2022. Have to stop at 2022. So, but what is important to me right now, guys, is this interest rate, inflation rate, unemployment rate, growth rate, GDP. These are the things that are very important to me right now. So let's go to cards. No, let's go to USD, guys. USD, I've seen at a glance. GDP, let's go to USD. Let's compare unemployment rate, same, growth rate is dropping. Can you see? Growth rate is dropping. Can you see? But look at inflation. Inflation rate is almost the same, but we know that this figure be true. This is as at April. Can we see as at June? This is the interest rate. Interest rate, no, inflation rate first, 8.5 to 8.3. Okay, that was at April, as at April. I think this data needs to be reviewed because we had the latest inflation rate data and it was higher, and that was why the interest rate was increased. All right, was increased from 0.5 to 1. Can you see? So right now, USD has a higher rate, which is from 0.5 to 1, and GBP also from 0.75 to 1. Can you see? Both of them with no interest rate differential. Can we see? So that explains why, for quite some time now, guys, GBP USD has not been trending the way it should trend, guys. That's not been trending the way it should trend. When you have two currency pairs, guys, that don't have much differential in interest rates, it's likely that they are not going to trend. So right now, I don't want to trade GBP USD. All right, I don't want to trade GBP USD. Why? The interest rate for card for USD right now is 1%, and that of GBP is 1%. So, what is the incentive to buy any of them against the other? So, if I'm holding USD, all right, in my bank, and they are going to give me 1% interest for holding this currency. And then what is the incentive, guys, on selling this USD, converting it to GBP, which of course is going to be the same. Is going to be the same value, okay? Because whatever currency, whatever value of USD you have, whatever amount you have, if you convert it to GBP at the prevailing exchange rate, the value is going to be the same. And if I keep it in the bank, they are still going to give me 1% interest. Okay, here 1% interest. So tell me, where is the incentive to have to sell off USD to go and buy GBP? There is no incentive, guys. So because of that, nobody right now is selling USD to go and buy GBP. People are not, investors are not interested in selling GBP to go and buy USD because there is no incentive. So if the situation arises and you are seeing that both countries, both economies have increased interest rates, okay, and even at the same amount, there is still, if you still look at the economy critically, you still see some fundamentals that will favor one at the expense of the other. So now let's go to growth rate. Now let's go to growth rate. Go to growth rate right now. This is United States. Look at the economy. Look at the growth rate. Where's growth rate? GDP growth rate is down in US. Can you see? As at March 2022, from 6.9 to minus 1.5, guys. Here, GDP annual growth rate from 5.5 to 3.5. But now, let's go to GBP, guys. Let's go to growth rate in the United Kingdom. All right. See, growth rate from 1.3 to 0.3 is down to annual growth rate from 6.6 to what? To 8.7. This is the joker, guys. So even if these two economies have increased their interest rate to 1% at par, but if you look at the economy critically, this growth rate, annual growth rate, has given GBP an edge over the USD. So if that is the case, guys, you should expect why, you should see why it's been difficult for GBP to just sell off. Why it's been difficult to have this corrective structure break down to the downside very sharp. Can you see why it's been very difficult? We have seen it now from fundamentals. So if you look at it with technical, we need to have this wave to the downside. But why it's not just going to fall just like that is because the interest rate for the two countries, for the two currencies, is 1% each. Okay, 1% each. All right, and then the growth rate for GBP is better, is positive than for the USD. Okay, it's better than that of USD. So if I have to judge based on this description I have given you, it means that, excuse me please, it means that I should expect some sort of correction here. This correction is going to, it's going to give us a clue. Of course, you know that this structure is supposed to proceed to the downside. But you also know that because of the fundamentals we are seeing before us, having interest rates for these two currencies to be 1% at par, but you have the growth rate for GBP better than USD. So that will tell me that I don't want to sell GBP USD now. And if I have to buy GBP USD now, based on this analysis, then it has to be a correction. And then when I get to a level like this, I'll watch the fundamentals again and then look for sell opportunity to the downside. Because I have to remind you of this. United States dollar is a currency that is number one, a reserve currency. A reserve currency. What do we mean by reserve currency? Currency, guys, most economies in the world save their money, have their reserve denominated in United States dollar. Number two, the United States dollar is a safe haven currency. A safe haven currency. Safe haven. Safe haven. Haven like this currency. That is in the moment of war, in the moment of instability, people save their money in terms of GDP, and when there is boom, they also save it in GDP, in USD rather. Do you see? So you can see a curve like this. Here is when there is stability, when there is wealth increase in income, USD stability. Here, USD is up. When there is war, when there is war, when there is outbreak of epidemics, when there is risk of, United States dollar is also very strong. Do you understand? So it's very, very strong. But when there is a recession, it's only when there is a recession in the US, high inflation and recession, you now have United States dollar down at this level. Do you see it now? So for that reason, even though United States dollar, even though United States economy is a bit coming down, it does not show immediately on the value of dollar. Why is it not showing immediately on the value of dollars, guys? Because the United States dollar is a reserve currency. It's a reserve currency. So as far as I'm concerned, guys, I'm looking forward to having this corrective structure here. When we get to these supply levels here, I'll be looking for sell opportunity to the downside. Why is it so, guys? Because if you check this place, okay, if you take your if you do your divergence, you see that this is convergence. So meaning if this is convergence, it means that we are not looking for upside again, we are looking for downside. And you know the rule, the last leg to the downside, take a fib when it gets to 5061.8, look for sell opportunity to the downside. That's what you see here. Okay, and at this stage now, guys, what we have to do is to take a fib of this wave, then we look for what? 61.8. Where is it, guys? At it here. So we are looking for this retracement down to this level and a sell to the downside, which perfectly support the fundamental analysis that we have just done. Is that okay, guys? So that is it about the GBP USD. Then if you look at it from smaller time frame, like 4 hours, look at it from 4 hours. I took this trade yesterday, all right? But I ordered for a close. Why did I order for a close at entry? These are the things I was looking at. That if this is taken as a three-wave structure to the upside, with this last wave taken or seen as a diagonal, then I was looking at this to be a complete structure. So would this be a continuation to the upside to complete this wave in three waves? For that reason, I called for the buy. And again, I also look at it that if you have these three waves here, guys, you have these three waves here, if you have this, it's possible that this will be wave A, 1, 2, and 3. Wave B, it's possible that this will be wave C. And then you have your move to the downside. Can you see? And after this move to the downside, you now have a three waves to the upside, 1, 2, and 3. Can you see? So after it has gotten here, you see that you now see that you have a supply area here, have supply here, boom. Can you see why do we call this a supply, guys? Look at this wave to the downside from here to here. Tell me, guys, where do we see a very big candle, a very big, maybe red or blue candle? red or green candle. You didn't see any green candle here, guys. It's all red candles. But within the red candles, guys, we do see one that is, that was dangerously and powerfully red to the downside, guys. Can we spot that particular one? Yes. Look at it here. This one, this particular one. It was powerful. Okay. So how do we identify supply area? How do we identify supply area, guys? Look at this candle. Look at the candle that formed before it. Where did it end, guys? I'll show you. It ends here. This little candle, guys, it ends here. This big one, after it forms, guys, where is the candle that formed after it? Where did it end? This wicks here. Boom. So, as far as I'm concerned, this is my supply level. This is my supply level because when this candle was breaking away from here, there was nobody in the market available to sell to buy. Everybody was selling. So there is something that is significant between the price 1.2900 and 1.3000. Within this 100 pips range, guys, there was something that was very, very significant there. That was why there was that excess supply over demand. So I'm going to look forward to this price coming exactly to this level. Okay, here will be a great opportunity to sell this market to the downside. Straight on. Boom. So anything we are doing here, guys, just a short trade as far as I'm concerned. So, like myself, I'm not going to try to take this one at this level. But if this market, guys, can give me this structure 1, 2, and 3, this is a clear corrective structure. And if you take a feed of these 3 waves to the upside, guys, you are going to see that in 50 to 61.8 is going to mark this level. Okay. Number 1, you're going to mark this level. Number 2, you have a 3-wave corrective structure. Number 3, if you look left, guys, you see excess demand here, right here, oversupply. There was no single red candles here, all the green candles. Okay, that means there was excess supply, excess demand over supply, and that exactly marked my level of 50 to 61.8, and that's where I would like to take a buy opportunity to the upside, guys. That was why I said close your trade on GBP USD because this was not going to break away. And can you see? I'm clearly justified, guys, because it did not go. We have to close our entry. It did not go. Let's be patient, guys. Let this market come to 50 to 61.8. As soon as it got here, guys, we're going to take this trade right from here to this level. And guys, how are we going to, find a confluence for this supply area here? How are we going to find a confluence? We are just watching. We are watching the market. Let the market be playing little by little. It's not doing exactly what we want. But as soon as it hits our level, guys, we're going to make money. So preparation in this business takes you a longer time. But when your preparation, happens exactly the way you want it to be, you will make money. So don't let us panic now because the market has not come to our level. Let's leave it. So let's find a confluence for this particular level. How do you find a confluence? You use trend-based fib extension, take from this level of 3 waves to the upside, take from there down to 3 waves to the downside, find a level between 100% to 103% fib extension. That is it here, guys. Can you see? So I have 2 confluences for this particular level between 1.2900 and 1.3000. Between these 2 psychological levels, guys, I have a confluence. And the first confluence is that I want, when we pick this trade from the retracement level of 50 to 61.8 here, we want to hit this supply level. Out of this push to the downside, guys, this push to the downside. This is the only supply level that falls within the limits of adequate retracement level in the market. That is the only supply level. Let me show you something quickly, guys. Real quick, check this. This is also a supply. This is also a supply. Can you see? This is also a supply. Can you see? This is supply level. And you can see along that supply level, there was a reaction. But that is not the supply level we are interested in. Because we are interested in the supply level that is along this impulse that meet up with minimum guideline of 50 to 61.8% retracement. And that is the only supply level that fall at this particular level. That is why we'll be looking for sell opportunity at this zone. Is that okay, guys? So that is it about GBP USD. So if you are looking forward to making money out of GBP USD, what you have to do right now, guys, is to wait, let this three-wave structure to the upside, this final one being a diagonal, this wave C being a diagonal, guys. This is a diagonal. Okay, this wave A, smaller time frame, you see this is wave B, this wave C, A, B, and C. You can see they are in the right proportion. You see 1, 2, 3, A, this is 1, 1, 2, 3 in the middle, and another one. That is B. So this one can still come up here. That is B. And then one is to come down. That is C. By the time it comes down, guys, when we take a feed of this level to this level, we will get 50 to 61.8 here, guys. And that's the level when you take a buy opportunity to the upside to hit what? To hit the supply level. Where is the supply level, guys? This is the only supply level that corresponds to 50 to 61.8. It's as simple as that, guys. So let's be patient and wait for this setup, to hit the level we want it to hit. Is that okay, guys? So let's move on, guys. Let's move on, guys. Let's go to another pair that we have taken is GBP USD. Going gradually. Okay. So when we look at it, guys, let's look at trading economics. Let's look at trading economics. We have seen, we already know the GBP figures and what's happening in GBP right now, guys. Let's go to AUD, guys. Let's go to AUD. This is how we do it. That the whole week we may not get more than 1 trade or 2 trades, but those ones, they are going to make sense. Okay, that's how we do it. But we are patient little by little. Whatever we make little by little, in the course of a year, guys, we will have definitely. Let's look at Australia. Where's Australia, guys? See, call my attention. That is Australia. Can I search it? No. See Australia here, guys. Australia. It's Australia, guys. Okay. Look at GDP growth rate. Okay, it's dropping. Look at the unemployment rate, it's the same. Look at the inflation rate, it's increasing. I see, guys. I see inflation rate in Australia as at March 2022 was increasing. Look at it, month on month was even increasing. This is trouble, guys. Inflation was increasing. But look at GDP. We want to see where is here inflation is increasing. You have to ask yourself a question, guys. This increase in inflation, is it as a result of the growth in the economy or as a result of what is called supply gap problem? If it's a supply gap problem, then it is an artificial inflation. So it is an imported inflation, guys. But if it is as a result of growth, increase in growth in the economy, guys, it is not an imported inflation. All right, it's an inflation that is arising as a result of increase in income, increase in economic activities, guys. Those are the things that can cause inflation. Look at it here. Look at the growth here. Previously 4.4, now 3.3. Look at it. Unemployment rate is even the same because the economy is not growing. Okay, so unemployment rate is the same. Unemployment rate will be the same, then the employment rate is the same. Can you see? So, but the GDP growth rate is dropping, guys. GDP is dropping. If that is the case, it then means that this increase in inflation, guys, is not as a result of growth in economy. It's not as a result of increase in income. Do you understand now? So what can we attribute it to? It can be as a result of other problems, guys. So in that case, if interest rate is increased, guys, I will not be tempted to buy Australian dollar. I won't buy it. You know, I've been telling you guys that it is not 100% guarantee that when you see a country increase interest rate, you now go and buy that currency. It is not 100% guarantee. You need to check first and foremost. This increase in interest rate, guys, is it as a result of the growth in the economy or as a result of other factors, which could be a supply, a supply gap in a special resource like energy. For instance, right now, guys, there's problem between Russia and Ukraine, and of course, that has created a lot of supply gap in the supply of energy to bigger economies. And of course, Australia is one of the biggest trading partner of Canada. I know Canada is one of the major exporters of crude oil all over the world. So if there are problems, there are shortages in other economies, you know that what Australia should get, they won't be able to get. So that supply gap problem will hit them, okay? And that shortages in the supply of energy can cause general rise in the prices of goods and services. And if that is the case, guys, you now know where this inflation, guys, is coming from. You know where it's coming from. And again, there has been problem in China. China has been in lockdown for quite some time now because of a fresh outbreak of coronavirus. And of course, you know that China is the biggest trading partner of Australia. China is the biggest trading partner of Australia. So anything that happens to China, guys, will happen to Australia. We will feel the effect on Australia. And how are you going to see the impact of the happening in China on Australia? You're going to see it, guys, in the value of their currency. So right now, based on what is before us, okay, buying GBP against AUD is a perfect, is a perfect decision to take based on the review of the fundamental before us. Look at this, guys. The GDP growth rate here is dropping here in the case of Australia, but in the case of United Kingdom, it increased. Look at the inflation rate, guys. Look at the interest rate, guys. It increased from 0.35 to 0.85. That of United Kingdom is not even 0.85. It's 1%, guys. United Kingdom is giving 1%. Do you understand now? So you can see that if you juxtapose this economic data together, if you are seeing a setup on GBP AUD, you are going to favor the buy. All right. So this is the background check you have to do on this your pair if you want to trade it. But right now, guys, let's go to the chart and now analyze what the chart is talking about. Starting from monthly, guys. Starting from monthly, see that this monthly time frame, this market is going to go down because, of course, you have this after this big drop to the downside. After this big drop, this sharp move is part of the correction. You have this A, B, and C. This will be probably 1, 2, 3, 4, and 5. It's possible. Okay, and then you have this sharp move to the upside. Can you see? Have this sharp move to the upside and then continuation to the downside. So I've made a forecast of what will happen to GBP AUD in the next 4, 5 to 10 years to come, using the method of ELLIOTT wave theory. You get now? Now let's if you have to label these guys, it will be with A here, with B here, and with C here. What will determine the size, the level of retracement of this wave C is going to be where this wave B ends. If wave B ends before this level here, this will be a possible zigzag. But I can tell you right now, real quick, guys, that because we have got this this retracement here hitting 50 to 61.8, guys, this is going to be a possible zigzag, A, B, and C. And if it's going to be a possible zigzag, guys, then you are going to take a trend-based sweep extension from here to this place, and then you now measure 100 to 123% sweep extension. This is where GBP AUD is coming, guys. All right, in order to fulfill the requirement and the guidelines of the formation of zigzag corrective structure. Why am I looking for zigzag, guys? Because this impulse alone, it shows sharp that it has got it to 50 to 61.8% of this move. So that's why I'm looking for zigzag. Okay, but now in this time frame, guys, you are looking for sell. Okay, but the available fundamental before us is saying that sell will not be easy at the moment, because when we just oppose the fundamental, of GBP and that of AUD, we see clearly that AUD is a better, GBP is a better currency to buy right now against the AUD. Is that okay now? So when you go to weekly, guys, you see the weekly, you see this impulse. This impulse must be corrected, guys. And because we are looking for the correction of this impulse, that correction might just be the buy we are looking for. Okay, and if you take a view from here, guys, to this level, you see that 50 to 61.8 actually hit a supply area. Can you see? Anytime you are measuring 50 to 61.8, you must look left and see whether you are able to capture an imbalance candle. What's an imbalance candle, guys? If you are selling, you see a small candle here, guys. A small candle here, guys. All at a sudden, you see a big candle here, guys. Can you see? And now see the next candle here, guys. All right, next candle here, guys. This is an imbalance candle. Can you see? It's excessively larger, and stronger than the previous candles or the candles around it. So in that case, for you to get the supply area here, where there was excess supply over demand, you need to check the end of the candle before the imbalance candle. Look at it here, guys. Mark it here. Check the candle after the imbalance candle. Mark it here. This price range, guys, between this level and this level is your supply zone. I don't want you to listen to people that draw this rectangle here and say this is supply zone. These people are deceiving you, guys. Don't listen to them. Don't listen to them. That is not the real thing. This is supply zone that I have shown you. A supply zone is a zone where there is excess demand over supply, or where there is excess supply over demand. And any zone where there is excess supply over demand, what is going to happen to price, guys? The price is going to crash down. And any zone where there is excess demand over supply, what will happen to price, guys? The price is going to rise up, because you have a lot of people demanding for a particular asset, and there are few people that have that market to sell. So they are going to raise their shoulder, and they are going to say, just because this particular product is not available, I'm going to raise my price. And everybody will be running up and down to buy that particular asset. It is what is expensive that you can't see anywhere. Gold is expensive. You will agree with me. You're not going to go to the street, guys, and find gold lying on the streets. But guys, you can pass and you see water everywhere. Water is cheap, guys. It's not expensive. That's why you see it everywhere. Do you get now? So you now understand the concept of demand and supply. So right now, we want to buy, we want to get this retracement from this level, guys, from this level to this level before we look for sell. And again, we have checked the available fundamental record before us support this retracement level back to this supply area before we can look for sell opportunities. It supports it. We have just checked it now. The interest rate, the GDP, and everything. And I've shown you how to relate the analysis together. So, to get this to the upside, perfect. Okay, now we have to go to smaller time frame right now, guys, to look at the to look at the technical setup, guys, that support the buyer to the upside in relation to the fundamentals. Okay, so we go to daily, guys. Now see this. Okay, I taught you something, guys. How to trade a retracement. How to trade a retracement. I taught you how to trade a retracement. Just hold on, guys. Just a minute, guys. So I told you, guys, that when you have a market that is falling, it's going to get to a place where it's going to make a reaction. Then it will come down. Once it comes down like this, guys, all you have to do is that you get to find a time to form a three-wave structure like this. Okay, it's going to form another three-wave structure. If this next three-wave structure breaks this level, guys, that is your trade. Take it from there. Take it from there. Even if you are seeing a second here, take it there, guys. As long as this wave here is equal to this wave, take it here. Or if you want to be conservative, let this go to the upside. Let this come like this. This is your trade, guys. Look at your trade here at this level. Boom, to the upside. Where are you targeting? You see, I told you there is a reaction here. That reaction here must be broken. Must be broken to the upside before you can catch liquidity. Why must it be broken to the upside, guys? Listen to me. I'm going to tell you something. You notice something? When this guy was coming this way, there is something that is very important at this level. What is that thing that is important? Demand. Demand. There was a demand. And because of the existence of demand here, there was a reaction, a bit of reaction to the upside. And at this level, the market pulls down. Do you understand now? So the significance of this level, this resistance here, the significance of that resistance is that if you take a feed of this level, guys, if you take a feed of this level, you want to ensure that 50 to 61.8 is above this level, is above this resistance, guys. So if it's here, beautiful. You now see that this top here, you have taken, once you break this area, you have picked a liquidity above this resistance, which is the best. And then before that, how are you going to look for this opportunity to the upside here? Because I told you this is W, this is X, you are looking for Y. Y in this case is usually very sharp. And I'm going to show you an example. Real quick, guys. I'm going to show you an example after this analysis. Do you see? So now, this is the wave. You're not going to buy this wave, don't buy it. You're not going to buy this wave, don't buy it. This is the wave you have to buy. This is the trend. This is the one that is going to emanate from here, guys. It's going to break this top, come to 61.8 before the sell. This is how to trade correction, guys. So in the case of, this is just the schematic to show you the illustration of the theory and my finding. Some of this, you're not going to find it on YouTube. You're not going to find it anywhere. This is my own discovery. Do you understand? And I will show you where we have applied that with success. Let's go to, let's finish the analysis on GBP, AUD. See? So what do you see here, guys? You see, as it was coming down, you see a reaction. See, it came down. Okay? So right here, guys, you see a three-wave structure to the upside. You see another three-wave structure to the downside. Marginally got to the level of this impulse. So you now need what? You now need what? Three waves up, three waves down. Then you have an impulse. This is ABC. ABC move. So when you have this ABC move, all you require to get it is a corrective structure. At times, you can have this corrective structure as X, you have Y, Then you have a breakdown, okay, and you have a move up again. This is it. This is an advanced stuff that I'm showing you. So it then means here you have had W, X, and Y, and this W, X, Y is a three-wave structure itself to the upside, which is a W, bigger one, and then this three wave down is X, and then these three waves up is Y, and after that, this move to the downside will have to happen here, and after that happens here, you now have this correction, proper correction taking place from here up to the downside. This is the wave that is going to catch liquidity at 61.50 to 61.8. But this is a complex one. Let me show you a much more simpler one. Look at it. You have 1, 2, and 3. Okay, 1, 2, and 3. And after this 1, 2, and 3, all right, you can call it W. Then this one is X. And what we are looking at now is Y. This Y is going to trend and it's going to hit the level of 61.8. So if you take the fib of this impulse real quick, guys, you take it, you see that 50 to 61.8 is around this level. Okay, and when this pair gets to this level, when you look left, you can see that when it gets to this level, it must have broken this top. If you get to this level and it has not broken this top, even if it's coming down like this, do not buy. Do not sell. Why? It's going to go back up. It has to take this liquidity. And in this case, I'm targeting between 0.618 and 0.78 because I see a perfect, red candle here. Perfect excess supply over demand here. And when this price gets upside here, guys, I'm going to take a sell to the downside. This is going to be a sweet sell. But for now, available fundamental, support this buy to the upside. All right. I believe we are getting it, guys. Is somebody there? If somebody is there, just unmute yourself and say you are there so that I know that you are hearing me.
We are getting it, sir.
Yes, you are there.
Yes, sir.
Okay.
We are there, sir.
Okay. All right. So that is it about AUD, GBP AUD, and that was why at this level we are taking a buy and we are holding it until we get there. That's the first pair that we are going to hold for such a long time. Next is Euro GBP, guys. Euro GBP. This market is giving us a lot of stress because of the strength of Euro. Okay, it's going to give us a lot of stress because of the strength of Euro. Okay, but then I've studied it and discovered that we are supposed to hold on the buy on the sell right now. We are supposed to wait, let this sell finish. I think what is going to happen is 3 waves here, 3 waves down, 3 waves here before this sell. That's what we happen. Okay, so and if that is the case, guys, we need to see these 3 waves in the middle complete. How do we see it complete? Already you have 3 waves here, you have an impulse here, you have everything that is happening in the middle here is with B. If this is A, you have B, you need to see C. So how is this B adjusting itself? Let's go to lower time frame. See it clearly. Okay, lower time frame, you see it clearly. So what I was thinking before is that I was expecting to have this B wave to be 1, 2, and 3, 1, 2, and 3, then 1, 2, and 3. This is WXY, guys, in B structure. This is A, this is A prime, B prime, C prime. And this A, B, and C, no, sorry guys, it's WXY, not A. 3 waves up, W, 3 waves down, X, 3 waves up, Y. And this WXY is the 3 waves, 3, 3, 3. And then that is the B of this A. This A is sharp. Remember, I said A equal to impulse, B equal to correction, which will always be in 3 waves. Okay. And then C is equal to what? Impulse. So you look at this one, impulse, 1, 2, and 3. That's correction. That is B. And then you have another 1, 2, 3, which is C. Okay. Somebody is getting confused. Let me clean up and explain very well. You don't need to rush, guys. Today is Wednesday. Today is our day. Right? Today is our day. Today is our day. All right. So smaller time frame, 4 hours. 4 hours. We have to do it properly. Watch out, guys. 1, 2, and 3. Do you see it? So what we are expecting here is another 1, 2, and 3, equivalent to this one. So what happens in the middle? So in that case, this here will be W. The end here, guys, will be X. And then we want Y here. So that this one here, which is 1, 2, and 3, will now replicate itself here as 1, 2, and 3. You are getting how I'm putting it now, guys. I want to show you how I'm putting it. Now, let's analyze what is happening in the middle. This W, this is S. Let's analyze this X. This X itself must be 3 waves. And how are we going to cut these waves to be complete, guys? We have seen in X, I'm going to change the color, 1, 2, and 3. Okay, let's change it to white. And then here you have 1, 2, and 3. Okay, and that would be another 1, 2, and 3. You can see why we have been trying to sell Euro GBP, but Euro is strong. So in that case, within the WXY itself, the X wave that's supposed to be 3 waves is now coming in form of W. Let me change it to white. W, X, Y. Okay, this is X wave is now coming in form of what? WXY. So after this one comes in form of WXY, this W will now come another of this size, this wave of this size, guys. It's expected to come here, to come and complete this structure here as Y. It is only after that that this one here will now come here. Can you see it now? So that is how we do this analysis. That is how we do this analysis. Is that okay, guys? That okay, guys? Okay. So so right now Euro is very bullish, very bullish. So whatever be the case, this is not going to go forever. Or this one might form like this. I'm trying to see the structure that will likely play out. So let's reanalyze. So that's the beauty of ELLIOTT wave theory, guys. Once you see the structure and it's giving you what you are not expecting, you've got to reanalyze. And so what might probably just happen here right now, guys, is this wave has come down in 3 waves, 1, 2, 3. So this has come 1, 2, 3, and you have this in the middle, 1, 2, 3, and you now have this one, 1, 2, and 3. Can you see? Can you see how you have to evolve the structure because of what is before you? So this is a corrective structure in the middle, which is a flat corrective structure. It's a flat corrective structure. Can you see? And this flat corrective structure, what is it connecting? It's connecting this wave here. I'll change this to yellow. Change this to yellow. Okay, connecting this one and this one, guys, and this one, guys, equally. So I'm expecting equal wave between this one and this one. I'm expecting it here. So when that completes, guy, we can now have this wave here. We can now have it here, guys. So, but right now, what I'm saying before me is that this has, in fact, I'm going to close some of my, I have a position on the Euro GBP. I think if it has not hit break even now, I'm going to close it because I'm seeing a change of structure because of the strength of Euro. This might just keep on going to break this top. Might come to break this top, guys. Come to break this top so that this wave will complete here. So before we can see any sell opportunity, if at all we will see, is until we have this wave complete. And again, I want to show you something, guys. If you see weekly time frame, this pair is right at the bottom of weekly. It's right at the bottom of weekly. The only thing we are expecting here right now, guys, is for this structure to form. See this sharp move? Sharp. We don't know when this will end, but the only thing we know is that look at the level, the beginning of with A here, A, B, and C. Look at the beginning here. Look at this B here, it has broken this level. So if the C can come and break this level and break this top, and this becomes what? An expanded flat for one more downside. See? Go and study my course on Elliott wave theory. You will understand expanding flat corrective structure. And this B is perfectly formed three-wave structure. Look at it. A, B, and C. Here, C wave here, balance. Look at the impulse here, A, B, and C. See now? Another scenario, another thing that can happen now, guys, is that this with A, this is 1, A, B, and C in the middle, and this is C. So you can have with A, with B, and with C can end here, and this becomes a running flat, guys. A running flat corrective structure. Have this to break this low. Boom. Bam. As soon as you break this low, guys, boom, to the upside. Why are we expecting this construction? Why are we expecting this structural construction, guys? The reason why we are expecting it this way is because right now, guys, Euro is in trouble. Eurozone, they are in trouble because of the problem of Russia and Ukraine. Russia and Ukraine, they are their neighbor. And they import energy, a lot of their energy from Russia. So right now, inflation is killing. If you want to know, what is happening to Europe, the position of Europe, go and study German economy. Because Germany is the largest economy in Europe. So anything that happens to Germany, guys, is going to affect Europe very largely. Do you understand now, guys? So for us to proceed, guys, let's quickly go to trading economics. Let's go to trading economics. Let's go to Germany, guys. Let's go to Germany. See Germany here, guys? Germany. Look at it, guys. Let's look at some other basic stuff, guys. GDP, look at it. And imagine GDP growth rate of 0.2. Okay, annual growth rate, okay, is increasing. That is good. Unemployment rate is the same. That is good. Inflation rate is increasing marginally 7.4 to 7.9. Inflation rate month on month increased marginally 0.8 to 0.9. Do you understand? Interest rate is 0. Interest rate is 0. Why is interest rate 0? Because euro, they spend euro in Germany, and the interest rate of euro is 0%. Now, watch out something. I'm going to show you something real quick, guys. Let's clean up this. I'm going to show you something real quick. I'm going to show you something. Just watch me. All right. So the interest rate on euro is 0%. Why the interest rate on GBP is what? Is 1%. So we can't be looking for buy. No investor will be buying a currency with interest rate of 0 at the expense of another currency of interest rate of 1. It's not going to work. It's not going to work. As a matter of digression, I told you when CAD JPY was coming down, I said, this will not work. I said, I will not sell it. Now let's go to CAD JPY. I said, I'm looking for buy opportunity. Let's go there. Let's go there. So whatever I tell you here, guys, is the real stuff. Look at it here. Look at it. I told you when we were here, let's go to 4 hours. 4 hours, guys. When this was crashing down, guys, here. No, here, right here. I kept on saying, don't sell CAD yen. Don't sell CAD JPY. Don't sell it. Don't contemplate selling it. The interest rate on CAD, guys, is 1.5%. The interest rate on JPY, guys, is minus 1%. No investor in his right senses will sell his CAD with interest rate of 1.5 and begin to buy JPY with negative interest rate of minus 1%. It's not going to work. So when this one was coming down, I said, don't sell CAD JPY. What happened? We see 1, 2, and 3. We're even expecting 1, 2, and 3. What happened? This became the whole corrective structure. This became the whole corrective structure. This was an import. This is correction. Look at the move to the upside. This was a projection. This was a forecast I made based on fundamental analysis. And I even made a special video on the fundamental analysis of CAD JPY. I said how to trade CAD JPY using fundamental analysis. Look at it, guys. YouTube.com. Data don't lie. Data don't lie. YouTube.com. Let's go there, guys. Are you guys on YouTube? Are you saying YouTube now?
Yes, sir.
Okay. Nathaniel Tunde, stroke fundamental.
Yes, sir.
Fundamental. Technical. I hope I'll be able to get this video with this description. Correct. Oh, this NZDCHF, guys. I need CAD JPY. What did I put there? How will I search it? No, I need CAD JPY. Let's go to Nathaniel Tunde. Let's just go to CAD JPY, guys. CAD JPY. Let's see if it will give us correct. CAD JPY trade idea. How to capitalize on interest rate differential. How to capitalize on interest rate differential. Guys, go and watch this video, guys. Go and watch it. You will see what I have told you. And you now understand why you have seen this move, guys. That's why I keep telling you, all I teach you here is raw. I teach you raw. I teach you the market raw. And whatever I say here, if you have other opinions, you got to think twice. Because I don't say it on my own. I look at the available data. I look at the available fundamental before me, you know, and I try to match it. I try to look at alignment between that fundamental and technical to be able to arrive at a concrete conclusion that is going to give us the return. Do you understand now, guys? So that is it about this. Let's go back to Euro GBP. The same thing is playing out here. Euro GBP. So I don't want to buy Euro GBP. I want to sell it. So, and for me to sell it, all I need to do is to see this coming, to see this correction over. This correction over. I was expecting before that we should have a 3 waves here, and then you have 3 waves here. This is what I was expecting before. So that here will be a 3 waves in the middle. Let me show you the waves. Look at it here. It's a corrective structure, expanded flat. You have A, you have B, you have C. This is W. You have A, you have B, you have C. This is X. We're expecting another A, B, and C. And that is why. So I was expecting that by the time Y is complete here, what happened? I have come to this level here, guys. Watch. I will have come to this level here, forming what is called an expanding flat and picking liquidity and supply and having a move to the downside. This is my approach. And can you see, guys? You see 1, 2, and 3. That is W. 1, 2, and 3. That is X. You need 1, 2, and 3. That is Y. This will be what will properly correct this move to the upside. Boom. This move to the upside is properly corrected by this corrective structure, and you have replication of this move here. You have it here. Boom. Can you see, guys? So this is how you analyze your market. So right now, for Euro GBP, please stay out of it. Let's wait. Let this corrective structure be over. Let it be over. Let it be over. Once it's over, you can have something like this, throw up, and then will come down. Once it's over, it can be set. All right. So is there another pair? Yes. Euro AUD. I think this is going to be the last pair I'm going to analyze before we call it a day, guys. Euro AUD. Euro AUD. Okay, are we there? Yes, we are there right away. So, Euro AUD too, you can see why it's not just moving. See why it's not just moving. The interest rate on Euro is 0. It's 0%. And the interest rate on AUD is 0. They just increase it to 0.3 or what? Let's check. Let's check. Australian dollar, where is it? Where's Australia?
0.85.
You have to look for Australia. These are background checks you have to do. Okay, what is the interest rate? That's 0.85. Can you see? Not even up to 1% differential. So don't expect a big move in this market. Don't expect too big a move. But then, if you look at this very well, look at it very well, look at weekly, see it. So right now, guys, anybody waiting in the waiting room? Okay, right now, guys, you are waiting for this correction to be over. You are waiting for this correction to be over. Take a feed